Happy Wednesday, everyone. It is a fantastic Wednesday. It's absolutely stunningly beautiful outside. That said, it's also an insane day for the market. And because it's been such a crazy day, I thought I would end up making a short video on this one. I don't tend to do a whole lot of market updates, but when you have weeks like this week, and this week has been a major one with so many things happening in the market, you got to address it. So today was by far the biggest day in the for the week, though this whole week has just one thing after another coming out. But the big ones that came out today was you had the Fed meeting, which started yesterday, finished up today, and Fed Chairman Powell ended up having his sort of talk after that meeting. We ended up having some of the pending home sales things come out. We had one on the mortgage-backed. What is that one? This morning we ended up having the Mortgage Bankers Association come up with some of their numbers for what's coming out with applications, which also ends up having an impact on our world. Just a ton of stuff that's happened. So let's talk about some of those things that have happened, what that is sort of doing with the market, as well as what we are seeing in the future, because the rest of the week is going to continue to be a full one. So for today, the first one that came out was the Mortgage Bankers Association. They ended up having something come out which basically showed sort of application volume. So in other words, how many applications are going for purchase volume. And it was funny because they said, hey, purchase volume as a percentage has gone down 2%. And the head of the Mortgage Bankers Association got a little nervous on that one, which I thought was hysterical because annually, so we are up 21% on purchase volume by application, which is a huge number. Like being up 21% in a year is amazing. And so she's saying, oh, we're down 2% for this past month, but we're up overall 21%, and we still have a massive low inventory right now. So I'm not seeing that being a huge issue, but they ended up saying that one. The other one that's impacting us is, of course, stocks. And the reason why that's having such a huge impact on us is because Congress is doing a sort of sit-down meeting with the heads of Google, Amazon, Facebook, and there's a couple others off the top of my head I can't think of. But if you actually put those 5 companies together, they, as a GDP, what they represent, they would represent the 5th largest country in the world, and they're all meeting with Congress today. So, yeah, depending on what they say, that could have a huge impact on the overall economy. I haven't heard everything that's coming back from them, but the good news is our economy, the stock market is going up right now. The other major one, which impacts my world, mortgage-backed securities in general, is what the Fed said, and the Fed did what we thought they were going to do. They left the rate unchanged, which is a very good thing. Federal Chairman Powell ended up saying typically what we were expecting to say, but basically they said that the sharp decline in economic activity and employment has picked up somewhat in recent months, but they remain well below levels seen in the beginning of the year, and that the path of the economy will depend significantly on the course of the virus, which honestly is all things we knew and expected, but that's a very good sign because we were expecting that. They kind of hit us right where it was expecting, and that's actually pushing up some of the numbers that we were hoping for, possibly pushing through the ceiling, and we may end up seeing some slight improvements in interest rates. Does that mean we're going to suddenly see interest rates drop, 25%? No, nothing like that. But we will end up seeing some improvements there, which is a good sign long-term for us for interest rates staying on course. And then the stocks, they did end up a day higher than they did in the beginning of today, so that's also a good sign. Fingers crossed, of course. But because of being such a massive change in today and so many different factors coming out, it's been exciting. Not sure if that's exciting down the road because we do still have the GDP annualized report coming out. We have the initial jobless claims as well as initial continuing jobless claims coming out tomorrow. So that should end up having a big impact on us. We also have the GDP price index coming out, employment cost index coming out, which gives us sort of an idea of what we're thinking. So what a job is actually worth. That's supposed to come out on Friday. And then overall personal spending report's going to come out on Friday as well. So lots of stuff hitting us all in one week. Usually this stuff is sort of spread out over a course of a month, and it's just one thing after another. So it's a very exciting time. Very positive for us when it comes to interest rates, though, at the moment. We just hope that continues to be the case as the rest of the week comes by. And maybe we'll do a final market update at the end of this week. But that's pretty much it. I hope you're all having a fantastic week. And I will hopefully reach out to you later on throughout the week. Bye.